So it's the same thing. I'm not willing to trade forex. So because I'm trading futures, and specifically index futures, I'm teaching you the concept with the real market. I'm not talking about something after the fact. I'm not showing you a hindsight cherry pick thing. I'm telling you these things in advance, and you're watching them form in your chart. That's mentoring. Okay, I'm showing you before the fact. Even when I'm uncertain because of a CPI number, I still tell you what I favor. I'm telling you what market I want to favor when I'm going long. NQ stronger because ES is weaker than NQ. So from an algorithmic stance, okay, if you were taking that logic or that data, you would say, okay, I want to trade. So where's the trade form? Well, I want to be long because NQ has a gap. And if NQ has the gap and it's willing to make higher highs when S&P is not, and we'll get to that in a moment, and the Dow is unwilling to make the higher highs. So right away, we've already figured it out. We've singled out, we've put the highlight on what market? NQ. What do we want to do with that market? We want to buy it. We don't want to sell it until it gets to the end of the weekly range. When can that form? Thursday and or Friday. And we'll get to that too in this discussion. So I don't want to be going long on ES, and I don't want to be going long on Dow. Now, that doesn't mean that there won't be a little bit of a spillover, okay, or a little bit of sympathy move. If there is a strong move to the upside with NQ, it might pull up the other indices, but not as much as NQ will go up. And in hindsight, I can talk with this now because I told you in advance it was going to be like this. Look at your chart. NQ outperformed to the upside. Dow and ES were lethargic. They were not willing to go up there. So my six sister concept is multifaceted. So you can't just run along and watch somebody put something on YouTube thinking they know what I'm doing. You have no idea what I'm doing. There's different approaches to using the six sister concept. There's times when using it with you and your present understanding of SMT, yes. That's one facet of SMT, but I'm teaching you a more advanced version of it where you can see like an x-ray view behind price where you should be focusing. For instance, if you're watching several forex pairs, okay, you're watching forex and maybe you're looking at the pound dollar versus the euro dollar, okay, and you want to know which one to be trading. Sometimes the euro is a better buy or a better short than cable. Even though cable can be exaggerated, cable's pound dollar, by the way. Just because the pound dollar can be a little bit more animated, in the same way that NQ is more animated than ES traditionally. It's a little bit faster market. So that's a characteristic that you need to be aware of. So if you have a market environment that is showing you, for instance, if the pound dollar is willing to make higher highs when the dollar is either going sideways or wanting to go lower, but the euro is unwilling to make a higher high, which one do you want to be buying? Now, if you've watched last week or so where I started introducing the six sister concept, you would think, okay, well, it's going to be the euro because it has to keep up with what the pound did. No. It's not that cut and dry. You have to learn more logic. I'm showing you and then I'm teaching you. So that way I'm showing you the concepts, what I used. I'm calling the levels beforehand. I'm telling you what I think is going to happen. I'm telling you what to look for in your chart, and your charts are printing off of those key swing points after I say them. So that way I'm teaching you to trust what I'm saying. So that way it's not just simply me talk about something that is very complicated, because this is complicated. It is complicated. It's not easy. It's not a one-trick pony video where I can go out there and say, do this, and there it is. Okay. I wish it was, and I've thought about this long and hard for the last few months, how I could bring in this specific concept. Do you need this concept? No, you don't need it. But I promised that I would teach things that I haven't taught before. Even my private mentorship doesn't even know this. The folks that have been with me since 2016, they don't know this. They're learning it right alongside you, and there's no advantage for them in this specific concept. They have no idea where I'm going with it. You don't know it either. I don't care how long you've been with me. I'm not trying to talk down to you, but you're trying to put things out into the community that it's incomplete. You have no idea what I'm talking about. You have no idea where I'm going with the information, and you have no idea what to do with it. So when I sit down, I tell you which market I'm favoring. I'm factoring in the willingness of the market itself to behave a specific way. That's market profiling. That's not market profile. Okay. I'm not talking about volume overlaid on a chart on a horizontal basis. Okay. I'm not talking about that. I'm not talking about VWAP and, all these other stuff. I'm talking about reading pure naked price action, relative strength analysis. That relative strength analysis yields the six sister concept. When the specifics are in motion, when they're in play, when things are as they should be based on my analysis, and which will be future your analysis when you can do this independent of me, which is the goal. You don't want to be toggled to or not toggled, but tethered to me as a mentor. Like, I have to constantly keep giving you breadcrumbs. At the end of this year, you're not going to need me for that, which is exactly where you want to be. It might be scary for some of you, but this is what you really want. You don't want to be relying on me or anybody else. You don't want to be buying someone's service, no one else's signals, none of that stuff. You want to be independent of yourself from everyone else. You don't want to be doing anything that relies on anyone else's input, and you want to trust what you know. But this idea of focusing on longs, you want to be looking at a market that's willing to already show its strength to go higher, and look back in recent price action. There should be indications in price action that shows you that it was unwilling to go lower on a specific swing or a number of candles in the past, where a closely correlated market, in deference to the indices as we're talking about here, NQ was not willing. It was not willing to make lower lows when ES and Dow was. Where does that occur? Well, if you look at the NQ low at 1 p.m. on Wednesday, May 10th, you see that? That's a higher low than that was formed earlier in the morning. Look at your 4 a.m. low. Now toggle to ES. All you have to do is on TradingView, type in the letter ESM 2023. Everything will stay the same, and it'll just go right to ES. And you'll see that on the ES, comparatively and respectively to those two turning points, there was a lower low at 1 p.m. on ES than the low formed at 4 a.m. on ES. But go back to NQ. NQM 2023 on your hourly chart, and you'll see that was a classic SMT divergence. So what was it indicating there? It was willing to show you that if you were following what I gave you this week, looking for that daily fair value gap that should be shaded on your hourly chart, where it dug down into that at 4 a.m. on Wednesday, May 10th, 2023. It was willing to go higher. Look at your ES. So ES M2023. On Thursday, ES failed to make a higher high than that of the high on May 10th at 9 a.m. So ES failed. It fell to the idea that I shared with it on Twitter. I said ES is weaker than NQ. Now, if I'm telling you one's weaker than the other, I'm indicating to you that if you are trying to trade intraday price action and you're just trading the intraday volatility, you're not really trying to worry about big runs, which is really where we're at right now. We still have not left this daily range where it gives this higher degree of swing trading probability, where it can move and move in like weeks in the same direction. We're not in that environment right now, folks, and we haven't been for a while. So I don't know when we're going to leave that, but we have to trade accordingly. Does it mean we can't trade at all? Absolutely not. It just means you have to adapt. You have to adapt. I got down here, started sweating my ass off because I'm not used to this kind of heat. I'm used to being up north. So I got to shed some clothing. I'm running around here with shorts and flip-flops with no shirt on. So no shoes, no shirt. But now we're talking new week opening gap. My mind was not on the half-naked women around me. Okay, it's not on my wife that's listening to country music that I can't stand listening to. My mind is, I got to look at what this chart was doing because I didn't get a chance to see it yesterday. And I'm going through withdrawal. I want to know how we closed. I want to see what we did. So I wasn't permitted to have the phone with me down there. So I'm going through a little bit of withdrawal. So I told her, I said, listen, I'm hot. I'm uncomfortable. You stay down here. Here's your Kindle. Here's an umbrella. Here's a drink. Enjoy yourself. When you're done, just come back up to the room. So I'm here talking to you about these things. I'm looking at the chart for the first time since really half the day of Thursday. So I think around 1 o'clock or so on Thursday was the last time I peaked at price. And I want to see how we performed. And true to form, NQ was the relative strength leader to the upside. And the shorts were better served on ES until, here's the caveat, until that weekly gap was delivered on NQ. So NASDAQ, once it goes, let's go back to your chart on NQ, M2023, that's your symbol for trading view. You should be on the hourly chart still. Look how on Friday, we stayed inside that new week, that weekly gap between 13,480 and 3/4 or 0.75 and the low of 13,453 even. Look at all the consolidation around that between the 6 p.m. Thursday candle all the way to a move at 9 a.m. on Friday where we broke lower. And he came back and touched it on the candle at 10 a.m. So he opened at 10 a.m.'s candle on NQ or NASDAQ, opened on that hourly candle and traded right back up to that gap low right there at the 10 a.m. on Friday, 1 hour candle. That movement, okay, there's several things here, and the apt pupil will take this and write it down with a great deal of excitement to go through price action and see this does in fact repeat. It's not just a one-trick pony. This in itself is a model, folks. Okay, I've mentioned this many times in teaching. Every time I brought in a new membership group of my private mentorship, which is no longer there, I'm teaching publicly. Okay, so stop asking me. You don't need to pay me, okay? I'm teaching you things until November, and then I'm going away. I'm going back to my personal life, okay? But I have 81 very specific PD arrays. Okay, I'm not going to teach all of them to you, but one of them I've made mention in public, and I've taught it in my private mentorship. It's the immediate rebalance. Okay, if you look at how, for instance, look at your NQ chart, NQM2023, hover over top of the Wednesday, May 10th, 2023 candle on NQ, your hourly chart. It should show that it's 2 p.m. if you're set to New York local time, which is how you should have your trading view chart set. So that way you can follow me. And it's also how the algorithm runs. So everything's booked and priced on New York time. I don't care where you are, who's told you different. It is what it is. Okay, this is it. So that bullish candle, that buy side imbalance, sell side inefficiency, that is a fair value gap. It does not completely get repriced to the low, which is the high of the candle at 1 p.m. on May 10th of 2023, when we drop down on the candle on Thursday, May 11th, 2023. Okay, that 10 a.m. candle, we'd made that low of 13,361.5. It did not completely trade down to the low of the fair value gap. So it left some of that open. That fair value gap is a draw when price is above it, and it seeks discount. If you go back to that candle at Friday, May 12th of 2023 at 10 a.m., that candle opens at 13,445.00. Notice that? If you're hovering over top of it, looking upper left-hand corner, midpoint of your chart, and you'll see the opening price, 13,445.00. Then the high forms at 13,454.75. That repricing, okay, that repricing is doing two things. Two specific things are occurring there. It's repricing back to a low of importance. What low would that be? Hover over top of the 8 a.m. on Friday, May 12th, 2023. Okay, so that low comes in at 13,453.75. Now that 0.75 is like creating the opportunity for a mohawk. Okay, a mohawk is where the price action just goes just a little bit past a very specific level. And when you're trading, we look for very specific things in precision, yes, but there's always going to have to be this gray area, which is what I taught in forex, where it's usually 3 to 5 pips. Okay, so because there's different brokerage firms and brokers are using different liquidity pools and their own in-house liquidity pools when you're trading forex, there is no centralized exchange. There's no, everybody has the same price. That creates an opportunity, like in the beginning, when forex became a thing where it was opened up to the public. It was the Wild Wild West. I mean, brokers were getting away with murder, stealing and robbing people. Okay, and it's gotten way better. But there's still this disadvantage in terms of in-house liquidity versus centralized liquidity, where everybody sees this candle at Friday, May 12th, 2023 at 8 a.m. Every single trader, every living soul that wants to handle the NQ on delivery contract June of 2023, we all agree that that high is the same high price. We can see that. It's there. We can see that. That's an advantage over futures, over forex, over crypto, over whatever. Okay, this has a built-in advantage, and it's much more refined. It's much more mature of a marketplace. And if crypto goes the way of the dinosaurs because of central bank digital currencies, which I'm holding that's possible, and I don't want to be involved in forex or trading FX when we're moving into this central bank digital currency. Like, I don't understand the risks and how far and vast it can be. And that's why I've counseled you to just at least respect that risk. You do what you want to do. If you want to keep trading Forex, go right ahead. You're in charge of your own finances. I'm not giving you financial advice. I'm telling you, this is the reason why I won't touch them. Because at any given time, something can happen and we can have a depegging. We can have something crazy where if I'm in that, I could get wrecked very quickly, and anybody else could be crazily destroyed. Just the same way when the euro and the Swissy was depegged and thousands handle, just boom, just like that, instantaneously. And brokerage firms themselves were instantly insolvent and out of business. Instantly. So if you have not paid attention to the things I've been talking about for several years, we're entering that. So I'm going back to my roots. This is where I started. I was a commodity trader. And this is the market that I felt most confident about, index futures and bonds. So I don't personally care if Forex goes away, or if we go to a one world currency, or this, that, and the other thing, or crypto takes over everything else. We're still going to have the futures market in the form of index futures for stocks. There's going to be companies publicly offered. Okay, that's not going to go away. So that's the reason why I went back to this. So that way, for the folks that are out there running around giving up, their own opinion about what I'm doing, why I'm not doing this and that, I'm reiterating what I've already said many times before. But that candle at May 12th, 8 a.m., yesterday, Friday, at on the hourly chart for NQ for NASDAQ, that low comes in at 13,453.75, which is 0.75 or 3/4 of a point or 3 ticks above the low of that gap on the weekly chart that I showed you, which is at 13,453 even. The high of the candle at 10 a.m. comes in at what? 1 point above that low. So it's allowing for what? It's allowing for that low that formed on 8 a.m. on Friday to be booked. No person that would be long aiming for that low as a target for a short entry or a long exit. And high frequency trading algorithms would have used that. Just buying that opening price at 10 a.m., an algorithm could go long there and sell at the low